All right, hello everybody, and hello to everyone who's come to visit us today on Selfwealth Live, our technical analysis edition here with Jason McIntosh. I believe it's to my left, and me, Roger, here at Selfwealth. Jace, how are you going today? How are we feeling this week?
Hey Roger, good. My voice has all come back to normal. So yeah, I'm pretty happy with that, and the sun's come out as well. So the winter stuff is all now passing, and we're getting into the in what I like, the warmer spring times.
Yeah, we're getting into some warmer weather, even though it's been quite heavy winds and down here in Victoria. But yeah, I'm looking forward to summer and hopefully a good period now. I guess, like I think I've said it a few weeks ago, I've always known August to be a quieter period in the market. So that's what I've been told, because a lot of people over in Europe and America are all on holidays. But things are starting to heat up. Maybe were you aware of that as well? A lot of people going on holidays over in America and Europe.
Well, that's always been behind the sell in May and go away phrase, which most people would have heard of, and that's all based around the historically trading volumes have decreased during that northern hemisphere summer, and the saying goes back to aristocracy times. So there's a whole story behind that, but it has continued on into current times, and the markets tend to be a little bit less active, maybe, but it varies from year to year. Seasonality is an interesting factor to consider in the markets, but it's just, I think seasonality is a bit like a barometer. It can give you an idea of maybe what you can expect, or what could happen, but it's can also be completely off base, as well as markets will do different things depending on what the situation at the time is.
Yeah. Well, there's one season that's happening right now, especially in Australia. Obviously, it's reporting season. So if that doesn't create a bit of volatility in the markets, then nothing will. So we're not here to talk about fundamentals in this show. We're here more to talk about the technicals around it, because generally, once again, when fundamentals are put out there in the market, a lot of the price action that we analyze is based off of that, and it's all sort of priced in one sense, right? So we analyze the charts and help you understand how to read the charts. Not to say that the fundamentals are a bad thing. Of course, they're a good thing to understand as well, aren't they, Jason? Really?
Yeah. Look, there are many different ways to approach markets. Some people like to really focus their attention on fundamentals. Others have a technical approach. Others have a blended approach, which can also work really well. I think it's important to at least have an awareness of price action, even if you're fundamentally based. Having an awareness of underlying trend, I think, can be helpful. I think one of the issues we can have as a pure fundamental or value investor is that sometimes a stock will appear cheap, but it can be stuck within a downtrend, trading below its moving averages. Having the awareness of that underlying trend may be able to delay a buying decision until price stabilizes, and maybe that can be employed well with a fundamental approach. But then, of course, we've got the pure price approach as well, which is largely what we talk about in these sessions.
In these shows. So before we continue, let's just go through the disclaimer. Thanks, Jace.
Yeah, so everything today that we talk about, it's all general commentary only. We don't do any personal advice here. And just quickly putting up the disclaimer we put up each week. I'm also not part of Selfwealth. My business is Motion Trader, so you can see all my details in the top section, licensing, etc., and then Selfwealth's details below that. Again, all the licensing, and just reaffirming that it's all general commentary only.
Thanks, Jason. Now, obviously, this show, once again, what we're going to do, if you're first time, or we go through the ASX market in general, we go through the US markets, and we go through the Hong Kong markets, because that's what we offer at Selfwealth to be able to trade or invest, however you want to look at it. When we do it from a technical point of view, once again, when we talk about fundamentals, if you're not aware, we're talking about things like company earnings, profit, loss, These sort of things that you read in the reports that are released by companies, right? If you're not aware what we mean by when we say fundamentals, obviously it could be a macro news event as well that can affect companies or industries or sectors, right? So they're fundamentals as well. They're sort of classified in the fundamental sector. Is there anything else, Jace, that you want to add to that sort of part of the argument there, or?
No, not really. It's there's all sorts of ways to approach things fundamentally, whether you're looking at macro stories like interest rates and economies, or coming down to company specific information, and the charts are a wide world as well. So it really is about having an understanding of everything that's out there and working out what kind of resonates with you, and seeing, look, is there a strategy which I can build around what I feel I'm able to apply.
Yeah. And I was having a chat with a couple of clients throughout the week, and they were telling me that, they love the show. They love what we do around the charts and the technicals and all that sort of stuff. But they also love to add an extra element to their plan, and that is having a look at some factors in the fundamentals of the company, right? And I think that's great. And to be honest, I've actually started applying things like that as well to my trading, right? I just quickly see if the company's earning money or growing earnings and things like that, right? So because I've realized now that there is, over time and following systems like yours, there is just so many opportunities out there that we're not going to, if you miss out on one, I've lost that fear of missing out all of a sudden. I don't have that because I know there's just so many opportunities out there. Right? So
there are. I think this is the advantage of having a price action based means of scanning the market, looking for certain criteria, and that can then, like, there's 2,000 odd listings on the ASX, too many to go through one by one. But if we can do broader scans and price action is a good way to do the scans, we can then get a relatively short list of stocks for closer inspection, and that could be inspecting which way you like, whether it be fundamentals or technicals or whatever. But it's all about, there's a whole lot more going on than the top 10 or the top 50 or even the top 200, and just having that ability to be across the whole market. And as you say, Roger, there's so many opportunities out there, but many of the best ones people have never heard of. And I look at my own portfolio, and most of the stocks by far, which I have in there, particularly some of the ones which are doing really well, I've never heard of before. But yeah, if we can identify an opportunity, then we can take part in it.
Yeah, 2,000 stocks alone on the ASX roughly, and there's probably about 1,500 of those that no one's ever even heard of, right? So, and I think I went off track before when I was talking about the structure of this show. Obviously, we're going to go through some general questions from anyone, and then we're going to analyze your tickers. So send through your tickers, and we'll get through as many as we can from a technical analysis point of view. Now, one of those chats also led me to a great bit of wisdom for one of my clients. I'm not sure if he's watching today, but he'll know who I'm talking about. And when I asked the question, how are you going? How's your portfolio going? He just answered, look, it doesn't matter whether the markets are down. I've learned to love all situations. I've learned to love the markets, whether they're up or down, right? So what about you, Jason? Do you have a similar
thought? It's a really interesting statement. It's a variation of that would be, love your system. It's something which I heard from one of the great trend followers who I've studied over the years. He said, love your system, love the losses, because the losses are all part of the process. I know it's a funny thing to say, love your losses, but it's rather than just hating the losses and getting down about them. It's just like, look, it's part of the process. My process involves letting winners run and cutting losses. So the losses are part of that process. So you, rather than get hung up about them, you accept them as part of what it all is. And it's not about going out and making 100% on everything you buy, because that's not going to happen. But it's to search for those 100% plus winners, and the losses are what those stepping stones that we take along the way. So, love your system, love your approach, and try and be at peace with it, and not get so emotionally wound up when we get those volatile periods like we have, because we know they are going to happen. We know they're going to happen again, but having those plans can help us come through it as calmly and emotionally intact as possible.
Yeah, exactly. All right, perfect. Well, let's move on with today's analysis to start off with. Let's have a look at the ASX and what's that doing? What's that doing?
Right, so let's jump over to the ASX 200. And yeah, look, Rog, it really has been an extraordinary 3 weeks. Well, we include the decline, it's been an extraordinary 4 weeks. But just looking at the last 3 weeks since the low. So the low was actually 3 weeks ago to today, I believe. And so out of the 15 trading days since the low, and that's excluding today because we don't know what how today's going to finish up. But out of those 15 trading days since the low, all except 2 have been up days. And yeah, it's pretty extraordinary when you get that. And who would have imagined when we were experiencing peak fear three weeks ago, and we spoke about this at the time. We're saying, look, don't panic with this. There'll be chances are there's going to be a rebound back towards the averages. We see what it looks like, but that was very much a peak fear moment. So who would have thought when we were experiencing that peak fear near the start of the month that we were going to be 13 up days out of 15. So the strength of this rebound, it's been impressive, and I think for many people, and this goes for myself as well, it's been surprising. I wasn't expecting such a powerful rebound. It was certainly a possibility that we did get a strong rebound, but this has been exceptional. And I think this is a thing with fear. Fear can come on quickly, but it can also evaporate just as fast as it comes on. I think the only fear which is out there in the market now seems to be fear of missing out. So, fear's swung to the other side of the boat, and now people who maybe panicked at the lows are now thinking, oh, look, I'm missing out, and they're scrambling to get back in. And I think this is why it helps to have a plan, having a plan that deals with volatility. And I think a good trading plan, it can make all the difference between selling out of everything at the lows and the difference between selling out of much at the lows and between having much of your portfolio still intact when prices rebound. And I think this is what we've had over the last month. I think this is a really good episode to remember. Unfortunately, though, as I think this will play out for many people, it'll probably be a fading memory within just a few months. But try and remember it. Try and remember how it felt during the sell-off, and what you were thinking when the market was on its lows. Where you're thinking, look, this is going to be the start of an epic crash, or was it a buy the dip moment for you? What were you thinking? How are you managing your emotions? And if we can remember these past episodes and take them forward, that's how we learn and how we manage things better in the future. And I think the thing to remember here is that most quick sell-offs don't lead to market crashes. And if we understand that, and then we couple that with a trading plan, well, then I think we become resistant to this fear-induced selling that we really did see those few weeks back. So where to from here? Well, the overall structure of this, it hasn't changed. It hasn't changed over the last month. It hasn't changed during August. The underlying trend remains up. Prices have made, just looking at this year, prices have made a series of new all-time highs, and we have rising moving averages. And that's the definition of a bullish structure. And I think this is a market that we should continue to be long. I'm looking at this now, and I did lighten my portfolio a little bit during this rebound, but I've still got most of the portfolio intact. I'm not rushing today to get everything back into the market, because looking at this, how quickly things have rebounded, I think there's a good chance that we do get some sort of consolidation in the near term. I think that we did have a false break higher 6 or 7 weeks ago. The market wasn't ready to take things higher. We've had this sharp pullback. We've had the rebound. I think it's all still part of an ongoing consolidation. And I think there's a decent chance we see the price come back towards the moving averages again. So I've got the 50 and the 100-day moving averages. And also remembering that September's also a seasonally weak month. So we're nearly into September now. Next week will be the start of September. And you look at September's history over time, it tends to be one of the weaker months. Doesn't mean it has to be, but there is a tendency for that. So after a really strong rally, coming into a seasonally weak month, I think there's a good chance we do get some more chop and some more just back and filling below the all-time high, which we saw at the start of August. I think the play here, Rog, I think it's staying long. I think it's continuing to use those wide trailing stops. The wide trailing stops are what help us see off these periodic bouts of volatility. And I think we should be actively looking for buying opportunities. If we do get a pullback to the moving averages, maybe that could set up some good buying opportunities. So it's one of those things to keep an eye on. Looking for pullbacks to the moving averages. Maybe that creates the chance to just get some more money back into the market.
Yeah, good take on all that. I just wonder how many people got out. I still wonder how many people got out on those days where it was just plummeting there. Probably due to not. I'm reading about this in a book actually, like the bandwagon effect, where everyone jumps on board an idea or a fad, but we don't all know the facts behind it. We don't know all the evidence behind what's happening, right? So we just jump on board and for instance, in this case, we probably sell off, and then after that, we still don't know all the information and facts, and then we're just kicking ourselves because we jumped on the bandwagon because we heard someone on the news say something, right? So and it's just followed on. So yeah,
it is interesting. Like trend following, to a large extent, is jumping on the bandwagon because we're buying a breakout, and I won't know why a stock's breaking out, and I'm not particularly bothered why it is. I can just see it is. I can see volumes coming into the stock. There's interest in buying it. So I'm happy to jump on that and see where it goes. And I'll use a stop loss in the event that the breakout doesn't go on. It either comes back and fails completely, or the stock just muddles along. I might get out of that and then move into something else. But it is following without understanding all the reasons behind it. I don't think we need to understand all the reasons behind everything, but we need to have a strategy for dealing with whatever the price action is that we're dealt. So, why did prices sell off for 3 days in a sharp manner? Well, there's all sorts of stuff which has been written up about that. But really, how much in the economy really changed over the last 4 weeks? Is it really that different to what it was just prior to the sell-off? I don't know. I don't think it really is. So, no one had clear vision during that period. But if your plan involved using a wide trailing stop, well, you may have been able to see that off. If you're a shorter term trader, where you've got different rules in place which deal with that. So we don't necessarily need to understand why it's selling off, but if we've got our plan in place that says, okay, we can give it room to move around, room to be volatile, but if it gets to our line in the sand, well, then we move on to other things.
Yeah, good clarity on that point. All right, well, let's get on to the US market then, please.
And one more interesting thing is, we're saying, like you were saying, I wonder how many people reacted to just selling out of panic. Another thing people do, which I find interesting to look at sometimes, it's they jump into those into a bear ETF or an ETF which gets short the market. So one of the ones on the ASX is this one here, BBOZ. It's a double exposure. It's approximately a double exposure short ETF. So if you put in $10,000, you're essentially got a $20,000 or a $25,000 short position in the market. So what often happens when we get a sell-off, the ETF will spike because it's the inverse of the market. But then what I find interesting to do is to put a volume, have a look at the volume on it, and you can see this is during the sell-off. You can see the volume's gone from there's a noticeable increase in the volume on the days of the spike lower. So there were a lot of people hedging their portfolios during and at the lows. I think the biggest volume day was just the day after the day of the low, and so then these people they've got all this hedging in place at the lows, and then they've got to, like, what do they do now? Like, look at the volume profile. It's dropped away as the price has been rallying. So you assume there's a whole lot of people which are trapped with hedge positions, which are now losing value. So it's these hedging ETFs, I think they're tricky ones for most people because people tend to put them on after the market has fallen, and then you get the rebound and they get themselves in bother. So, but yeah, just a little sidetrack there into how people respond to market volatility.
And I like that insight. Very good, Jace. All right. Actually, while you've got the volume indicator, there is a message there that says, what are the Pingu, what are the green and red bars in the volume indicator? So that, I mean, you sort of said it in that, but maybe we can just explain it again.
The green bars would be, that'd be a day when the price is rising, and the red bars would be a day when it's falling. So in the case of this, it's inverse to the ASX. So the bear ETF is rallying when the ASX is falling, and you've got the green volume showing there's a flood of money coming in on the up day for the bearish ETF. Of course, there's a down day for the ASX.
Yeah, I believe if you hover over it, it says the volume of trades as well, right? Is that right? The volume of trades.
Yeah, you can. You'll see it up here in the corner when I'm over the top of it. You'll see what the volume is, and the volume changes in each bar. But that's just learning how to use it. A lot of the charting services are similar. You run over it, and it will tell you what the the high-low close data comes up. You can get all the information you need.
Yeah. All right. Let's have a look at the US market, please, Jason.
Right. So jumping over to the S&P 500, and this has been one of the great recoveries from a sharp sell-off. Very much like what we've seen in the ASX 200. And the S&P 500, it got within, I think it might have been, yesterday, it got within 0.3% of its all-time high. So, it's almost there, almost back at an all-time high. And in the process, it had 8 up days in a row. So the ASX, I think, had 10 up days in a row. The S&P 500, 8 up days in a row. And that's the first time this year the S&P 500 has had that long sequence of up days. So where to now? We'll start with the underlying trend and the underlying structure. And just like I was saying with the ASX 200, the market remains in an uptrend. And I think our default position should be to favour that incumbent trend. So the incumbent trend has been in place for many months. And a short, sharp fall below the moving averages doesn't end that trend. Nothing's happened over the last few weeks to I think change that underlying trend, and I think this will remain the case until we get clear evidence to the contrary. So for me, evidence to the contrary is when you get price starts to consolidate below the moving averages, and the moving averages start to roll over, and price breaks lower again. That's when you say, look, the structure's now it's now meaningfully changing, and prices are now vulnerable to the downside. But that's not what we currently have. We still have a market with moving averages are still positive, and prices now back above the moving averages. We've also got that prominent V-shaped recovery. And we typically get this V-shaped recovery when there's strong underlying interest in buying the dip. And this is something we were talking about a few weeks ago. It's like, watch the next rebound. The next rebound is going to tell us a lot. If it was a shallow rebound that just chopped underneath the moving averages, that's where the buying interest is lackluster, and that's when the market becomes vulnerable to another hit. That's not what happened. We got robust buying. So it shows that underlying interest. I've seen a few people trying to when I go on things like X, there's all sorts of analysis and ideas come up. A few people are there trying to plot a course for a bear market that is like it's a quick rebound and then prices will quickly turn again. But I just don't think that's the right approach. I think the odds, as I was saying earlier, I think the odds favour the incumbent trend. I think we want to back the incumbent trend, not try and pick a reversal. Picking reversals are just, I think the odds are against trying to call the reversal. I think you're just better off just saying the underlying trend remains up until the evidence tells us otherwise. That said, I don't think we should be expecting this is going to continue at this rapid rate. Just like I was saying with the ASX 200, I think some sort of consolidation is quite possible over the next few weeks. Again, maybe back to these moving averages, a 50-day or maybe the 100-day moving average. Maybe we get some sort of chop back towards the averages. Like, I could be wrong, and this market could keep rallying. And if it does, that's fine. I'm long stocks generally, but I don't want to be just like we were talking about FOMO earlier. FOMO, fear of missing out on the rebound. People who got out, they now pile back in. I wouldn't be just piling back into everything right now, just beneath the previous all-time high, because I think there's that scope for consolidation. What we'll do, let's just quickly put on an RSI, a relative strength index. I think this is interesting to give a perspective around the strength of the current rally. So S&P 500 is nearly at an all-time high. If it popped up in the next day or two, we'd be saying, okay, all-time high. Look at the RSI. It's nowhere near its previous high. So it sets up the potential for divergence or non-confirmation. And now that doesn't necessarily mean a market has to fall. There's a good example just during this period last year where we had the RSI was declining, but the market kept rising. So it's not a the be all of end all of all indicators. It's just one of those factors to be aware of when it happens. Sometimes it gives us some quite good warning. So look at this period here where we had market kept rising, but the RSI didn't. So just when you get that non-confirmation, it's just a sign that maybe the market is getting overstretched and needs some sort of a pause. I'm not suggesting that's what's coming. Nothing's suggesting that at the moment. It's just an example of where non-confirmation for the RSI was a sign that the market was maybe the upside potential was not so open at that point. And this is what I think now. I think maybe we can see that pullback to the moving averages. Nonetheless, so I think the play here remains staying long stocks, using those wide trailing stops, and helping see off these pullbacks when they happen. I think this correction, it was aggressive, it was unpleasant, but it was also entirely survivable if you had an appropriate strategy, and that's what the wide trailing stops are designed to do. And that is, it's to keep you in your best stocks for as long as possible. Sure, you're going to get some casualties in the portfolio. Some stocks during this period will come back, they'll trigger trailing stops, but doesn't mean the whole portfolio gets turfed out at the low. A lot of stocks would have been comfortably above a wide trailing stop, and some may be back at new highs already. It case by case basis, of course, but I think that's the play now. It's staying long, but continue to use those risk management strategies for when we do get the volatility, or for when things do invariably change at some point.
All right, fantastic. Let's have a quick look at the Hong Kong market then.
Yeah, look, not a lot to say. Continues to rebound over the last week, but it's not really. I think it lacks convincing momentum in either direction. It's now just oscillating either side of the moving averages. So look, I don't think there's much to go off here. I'd just rather leave this one alone. And when I look at the Chinese market, it just reaffirms that thinking. with the we've had this bounce, but it's just bounced to beneath the declining moving averages. So yeah, let's wait and see. Does it stall here and then potentially turn lower again, or can it break back above the moving averages? But any which way, I don't think there's any great setups here at the moment. I think there's more interest elsewhere. I think there's markets elsewhere, there's stocks elsewhere. This one's just not set up to be excited about, and that's okay. It's okay to have a market which just doesn't have any great appeal. You put it to the side, go to take opportunities elsewhere, and then when the time is right, come back and revisit it. And you never know. There could be something good that comes here later in the year, or it could be just continue to be on the sidelines for many more months. Wait for the price action to tell you when it's time.
All right, so pretty much status quo for those, especially over the last few months. All right, well, just back on the volume. Hey, Graham, how are we doing? Yes, we spoke yesterday. Good on you for coming. Thank you, and thanks to everyone else that's come, obviously, today. Don't forget to share, like, subscribe, comment, and I'll be sure to obviously look at those and give them a like or answer if there's any question in there as well over time. In regards to that volume indicator, it's good clarity, good clarification in there from Graham. Because even on our Selfwealth platform, it's the volume of shares traded in that time period, right? So if you have a day time period, it will show the volume of shares traded over the day. If you put it over an hour, it will show that volume bar will show the number of shares that's exchanged hands in that time period. But it only accounts. I'm not sure 100% about TradingView, but Graham said that it's only including ASX data, and it's the same with the Selfwealth. We're only showing the and not the CBOE one at this point. It's not showing the shares of CBO exchange over the CBOE. All right, so yeah. Good clarity on that. And there's a bit of commentary there on volumes between ETFs on CBO versus ASX. Obviously, that's all going to be different, and I have no idea about the exact statistics around all that. But let's have a look. Jay said our first few tickers, if we can then. Let's have a look at IRI, and then, yeah, IRI to start off with. One that got me out not long ago.
Yes, this was a stock with lots of promise and didn't deliver. Was a motion trader stock. It got turned up in the signals. May have been around April as it was starting to break higher. Got a great initial run, but it's all come apart in the last few weeks. Look, it's for me. It's triggered the motion trader stop, so I'd be out of it. I certainly wouldn't be buying the dip at this point because we don't know how far it's going to fall. It's like I like to buy the dip when prices are above the rising moving averages. This is now below moving averages, which are rolling over. So I certainly don't want to try and buy it. If I had this stock and I hadn't already gotten out, I'd be looking to get out. Like I think there's a reasonable chance there'll be some sort of a rebound back towards the moving averages at some point. I'd be be quite typical to see price action like this develop at some stage. We do get some sort of a rebound back towards the averages. From there, it's a case, well, can it reverse and continue higher, or does it just set up for a vulnerable setup for another decline? So if this were in my portfolio, I'd either be exiting now or looking to exit on a rebound. And this is the thing. Not every stock which shows great potential is going to deliver on that potential. And this is why we have a portfolio of stocks, and we're just we don't try not to get excited or passionate about any one in particular. We don't buy into the story. It's just like, okay, we have price momentum. This could go a good distance. Let's see what it does. If it does, great. If it doesn't, oh well, not to worry. Let's move on to the next one. And for me, it's time to move on to the next one.
Yeah, I can't help but look at that and just be prepared for something like that. When we started seeing that head and shoulders develop in that most recent price action there, Jason, are you seeing what I'm seeing there on that?
Yeah, so you're probably looking at at this here. So you can say, yeah, look, there's a head and shoulders there.
So I was actually preparing for this down full. Obviously, I got out of it as soon as it had that big down a couple of days. But I was preparing for it, and I had it on my watch list to look at it, right, knowing that it's potentially going to fall, right? So that's just me, right?
And I don't pay too much attention to these head and shoulders patterns. It's because, yeah, look, they can lead to this stock had become stretched above its moving averages. So some sort of pullback to the averages was completely within the bounds of possibility. It could have bottomed just here where I've got the cursor now, and then started to rebound. So I don't want to get out of what could be a trade that could last for 1 to 3 years based on what could just be a weakness over maybe a month or two. So that's why I've got the wide trailing stop. So I need to be clear what my time frame is when I'm trading in the market. Am I after something for going for 1 to 3 years, or am I trying to swing trade moves that might last a few weeks or a month? So looking at a pattern like we have here with this head and shoulders, and we had a breakdown, I'm not looking at that as being significant from maybe 1 year out, but it could have implications for the next month or so. As it turned out, it turned into something larger. But if I'm jumping every time I see a break of a short-term trend line, it's going to be very hard to stay in something for a couple of years, because we are going to get reasonable volatility in stocks. But then once we got that big down day, it became too large, and it had to, I think then it's a case of them protecting capital and moving it on.
Yeah, I mean, everything's easier to see in hindsight, right? It was, I think, I didn't get out of it until it hit down to that 62-cent mark, right? So, but I kind of had this feeling that may have happened. It's just nice to know about these patterns and seeing them happening in real time, I guess, right? So, all right, let's have a look at RUL.
So this is getting into a vulnerable position with the price consolidating below the moving averages, and the moving averages starting to turn. I've got a few of these in my portfolio, but I'm not thinking of closing them out at this point. I've got the wide trailing stop in place. I'm not sure exactly where it is, but it's somewhere below current levels. Now, this could, I say this is getting itself into a vulnerable position. That doesn't mean it has to break lower. We could also, like a bullish take on this would be that we have a zigzag correction. Yeah, strong rally, zigzag correction. The second down leg of the zigzag correction will typically take a stock below the moving averages, and that's okay. These periodic excursions below the averages are reasonable, and from here we could get the stock that starts to rally again. So we could see that. We could see the zigzag correction, then we could see strength return. We don't know. We don't know at this stage. What I'm looking out for now is, do we get this sort of price action where it just starts to trade sideways? These moving averages continue to roll over. That's when the real vulnerability comes in place, and we start looking for that type of price action. But as I say, we don't know how this is going to develop at the moment. So for me, it's a case of using that wide trailing stop to stay in. I give it the benefit of the doubt, because I make most of my money on the stocks that run for 1 to 2 or maybe 3 years. I've got a modest gain in this at the moment. I'm happy to give back a modest gain. I'm happy to swap out several modest gains for the chance of staying on 1 or 2 which go a really long way. We don't know which one this is going to be at this point. So I don't want to buy the dip because of what those reasons we're going through. It is starting to get that vulnerable point, but I don't want to jump off the boat just yet either. So yeah, we'll see how this one plays out. It's still in the game, but yeah, there is vulnerability coming into it.
All right, let's have a look at SS1, please.
Haven't seen this one before. Maybe because it's a new listing. Look, there's not a great deal for me to say on this one because I really need price action, and we've only just got enough for the 50-day moving average to be appearing. So look, it's hard for me to really go too far with this one here. We do have a trading range which has developed over the last few months. So look, we could say that's the range. So maybe I probably wouldn't be a buyer at the moment because it's at the top of towards the top of the range. Maybe it pulls back towards the 50-day moving average. Maybe it could be, if someone really liked it for whatever reason, maybe they could buy a breakout from this general range. Stop losses back below the 50-day moving average, but there's just not a whole lot to go on at the moment.
All right. PME.
Nice uptrend in place. We talked about this earlier in that some stocks are back at all-time highs. Well, this is one of them. Wide trailing stop could have seen that off. The pullback just came back to the 100-day moving average. We've had other examples where we've had quick sell-offs back to the 100-day moving average, touch below, but nonetheless, the structure never changed from being bullish. We get these periodic retests of the averages, and that's what's happened so far on this. This has been a stock which has been it's been a great trending stock for some time. If I was holding this stock, I'd continue holding it. It's always harder to buy these stocks at all-time highs after they've been rallying for so long. But there's nothing here suggesting this trend is ending. Do we get some consolidation because it has run a little bit from the moving averages? Well, if that scenario I was talking about with the ASX were to play out, you'd probably get a pause in this as well. But as I say, trends up. I'm more than happy to let a stock like that run.
Mm-hmm. All right. MME, please. Oh, MM.
Just see where it's come from. I think this is a motion trader stock. I think it turned up in the signals a couple of weeks ago. Maybe it's not. Looking at the price, the price is too low, so it wouldn't be. But it meets the criteria. Most of the criteria I look at, except that the volatility is too high. So we've gone from below the moving averages to above the moving averages across. That's all great. Initial run, pull back to the averages, and then it's accelerated again. So if I were holding it, definitely be still holding it. I wouldn't be a buy here because it's just too stretched above the moving averages. I think there's too much scope for this to at least pause or pull back. Like the difficulty always is once a stock has run from, so this has gone from 8 cents to it's almost doubled. So like where do you put your stop loss? It's a difficult one. So this is why I find it difficult to buy at current levels. So you're looking at, just to get back to the below the 50-day moving average, you're looking at about 40%. So then you start guessing at something, saying, "Oh, look, I'll put 25% on it because it feels about right." Maybe that's okay, but I'd rather, if I was going to buy this, I'd rather wait for the next consolidation, see how it looks, and then consider an entry point from there. But as I say, if it's in the portfolio, I'm happy to leave it in there with that nice wide trailing stop. And the thing is, I think with these stocks, which can potentially go a long way, you've got to be prepared to give back a good part of that initial gain if you want to try and stay on something which could get a whole lot bigger over many months or a year or longer. If you want to use a tight stop loss, it's probably going to end the trade relatively early. If you want to be on there for potentially a long ride, got to give it lots of room to move.
All right, fantastic. Let's have a look at MAM, please. MAM, ma'am.
Yeah, look, yeah, no, this is a no for me. I wouldn't be getting involved with this at the moment, and I wouldn't have a position in it either because it's been trending down for some time. I it could form a base around current levels, but there's just no momentum with it at the moment. So there's no hurry for me to get interested. I'm just looking, is there any sort of like structure we can keep an eye on? Like, is there a bit of a channel there? You know, maybe there's some sort of a trend channel there. It's nothing I'm too excited about, but for just getting an idea around some general structure, I'd want to see the price get above these moving averages. The moving averages start turning higher. So really, probably looking for the price to get above this channel top, even though I don't think it's the greatest channel ever. It does have some relevance. I think that would be a visual that we've got sort of like turning price action. The price action is starting to move to the upside if we can break out of this channel, and then of course the moving averages would have swung around, and then it's something I might be able to consider. But at the moment, I don't want to just try picking a low point, because who's to say this isn't like this? This has been like 18 months of grind. Who's to say it's not going to continue grinding for another 18 months and you're just stuck in there going nowhere? So for me, I don't have the price action to support getting involved.
All right, let's have a look. There's a few here from Huzzle, so we might do a couple and then we'll go to some others. And if we got time, we'll go back to the other two from Huzzle. IEL.
Well, downtrend is still in place. We've had a nice update, but that doesn't change the structure from bearish to bullish. It's like this could be a stock which is starting to turn around. Like if we were using 10 and 20-day moving averages, we'd probably have a turn. It's like moving averages can be, if you want to see earlier signals, you use shorter moving averages, like a 10 and a 20-day cross, but you're going to get a whole lot more activity and more false breaks. I like the 50 and the 100. I get fewer signals. I get in a little bit later, but I've got a whole lot of less signals to deal with. So for me, there's not enough here yet. I'd like to see the next consolidation. What's that going to look like? So if this stock were to get some sort of like sideways movement going over the next month, maybe the next few weeks, next month or so, then the moving averages start to turn underneath it. That would start to set up a structure which I'd become interested in, and then it'd be a case of like, okay, do I want to buy the break out of that sideways pattern? Because we often do see this. We see prices have that initial strong move, then they track sideways into the moving averages. So it's getting ahead of ourselves because we don't have the price action yet. But this is just the sort of thing which I look for. If it doesn't set up like that, well, either maybe it just comes straight back down, and I'm glad I didn't get involved, or it just shoots higher, and it's just sometimes I'm not going to be on board. Things will happen. Maybe there's a takeover announcement and the stock opens at 22 next week. Don't know. I can't. I'm going to miss things where things like that happen. I'm looking for structure that I can work from and I can manage risk from, and I accept that I won't catch everything. But at the moment, this is something I'm happy to watch with positive eyes, but I'm not ready to jump in just yet.
All right, BIO.
Yeah, so like my concern with this is that we've had the initial sharp decline, we've had the rebound, and now we're going to get another leg down. So I don't want to buy it. If I had it, I'd still be holding it. I'd still be using my wide trailing stop, but I'd be yeah, it's like we could get a situation, maybe not dissimilar to what we saw earlier in the year, where the price did get away from itself, initial fall, rebound, and then it came back and did some more work at lower levels. So you could see something similar happen again, where it does take a few months to pull back lower, and from there it could turn higher again. So if I had this stock, I wouldn't be selling it, preempting a decline, because the decline could hold above a wide trailing stop, and then the uptrend could re-engage later on. So I'd continue holding it, but yeah, I don't think I wouldn't be a keen buyer at the moment. I'd like to see some more price action, see a longer consolidation, and then again maybe buy the breakout if that were to happen. Or if it wasn't to happen, well, I don't need to get involved. I can just stand aside and leave it alone. So a hold if it's in a portfolio, wide stop, but leave alone if you're not already there, I think.
Okay, all right. Let's get on to SMR, please.
So a little bit like RUL that we spoke about earlier, in that it puts itself in that vulnerable position with the price below the moving averages rolling over. But it could also be the zigzag. So we've had a right period of rising prices. It could also be the zigzag consolidation. It could be part of a larger trading range that might develop over several more months. It could stretch into next year for all we know. It doesn't have that upward momentum at the moment, so I'm not in a hurry to do anything. I don't want to buy this dip, because I prefer buying dips that come back to rising moving averages, not when a market has fallen below the moving averages. If I had it, I might be, depending on where I got in. If I got in at higher levels, I might just close this out. Say, look, it's had enough time. I'm just going to move the capital elsewhere. Like I use a time exit. If the stock hasn't performed in a predetermined time, I'll say, okay, look, it's not working for now. I'll just take the money out and move somewhere else. If I was in from good levels, I don't know where else you'd be in at good levels, but someone had been holding this for a long time, I'd be inclined then just to maybe let it run, see whether this turns into some sort of a range, which then ultimately resolves to the upside. But I don't think there's a hurry to be getting involved at this point.
All right. All right, Michael looks like he's gone, but he'll watch the replay. How do you frame your mind around stocks like LOV? Suddenly down a lot today compared to previous days.
There's been a bit of this. There's been a bit of this stuff going on during the reporting period. Stocks which, like, it's uncommon price action for a stock to go from an all-time high to a sharp decline. It does happen, and it does happen around those reporting periods where the market is just completely wrong-footed in its expectations of what the company's going to deliver. And you get these abrupt reversals. Fortunately, they're not overly common. It's also maybe also to do with the volatility we've had generally in the market, that there's a bit more skittishness around some of these results. What do I do with it now? Well, if I'd bought the breakout a few weeks ago, I'd probably be looking to close the position out and just take a small loss and move on, because there is technical damage here, no doubt. When a market falls, gaps lower like this, If I was in from lower levels, in from good levels, I'd be inclined to keep it there and just see what happens. Wide trailing stop, like I've got this blue line I've drawn in at a previous time. Like, where would a wide trailing stop be? Wide trailing stop could be sort of like up in this region around, $28 perhaps. So yeah, if I was in at good levels, I'd give this the benefit of the doubt in that maybe it's just going to spend time going sideways, repairing the damage. Then it could turn higher again. If I was in on the breakout, I'd probably just cut my loss, small loss, move on. But I certainly don't want to buy it. I don't want to buy this fall and try and be cleverer than the market and say the market's got this wrong, I'm going to buy it, because I really don't know. So I'd stand back if I wasn't in it.
All right. Let's have a look at MYX.
Yeah, there's there's potential of a turnaround going on in this. It's been out of favour for a while and has had false starts before. I'm not in a hurry to act on this one, because really it's probably results related as well. It's got 3 up days, doesn't make an uptrend. This has been a tough stock for a while. It's up and down, and it really hasn't gone too far. That's not to say that's always going to be the way. Could this be? Look, it could be basing around here, but we need more price action. We need to see what the next consolidation looks like. Do we get the sideways move while the moving averages start to turn? And then I'd buy the breakout from a consolidation. But that's at least a few weeks away. So maybe one to watch, but for me, not one to act on at the moment.
All right. WDS bottomed out and paying a good dividend. Divvy, should we buy and hold for 13 months and get about 18% just on divs?
Yeah, I don't. 18%'s amazing if that's the case. Like, you've always got to wonder, like, is that dividend going to be maintained?
Yeah, exactly.
There could be a special dividend there. I don't know. I don't know the situation around the dividend, but just looking at the price chart, it's not a bullish structure at this point. We've still got, even though it's had a good day today, it's still below these declining moving averages. There were good days in these previous rallies back into the moving averages, but then they subsided and the price started to give way again. So it's not a turnaround at the moment. It could develop into one. Like, oil's an interesting one, because oil's been in this big coiling structure for like 18 months. If oil breaks to the upside, well, look, maybe that's all going to start to bode well for stocks like Woodside, but it could also break to the downside. I don't know. We don't know which way it's going to break. I'd like to give this a little bit more time. See if you can hold on to these gains. Maybe it goes sideways. Can it go sideways and hold these gains? Let the moving averages start to turn. Could be something here, but there also may not be. And an 18% dividend, even if that were maintained, if the share price starts, if it's another case of sell the rally back to the moving average, even a strong dividend can be eroded by ongoing falls. So you never get a free kick in these markets. And for me, there's not enough positive momentum yet to say the structure's changed to a point where I'm happy to put the capital on the line and take the risk on board.
To get the dividend. And just to be, I don't think it's technically bottomed out just yet. We've still got a fair few lows to hit until it truly bottoms out, right? So it could still be going down just as much as it could go up, right? But we don't know that yet. All right, let's move on to EZZ.
It's similar to a stock we were talking about 3 or 4 stocks ago, in that got stretched above the moving averages, had that big fall back to the averages. Like, I always wonder when I see this structure whether we're going to get the zigzag. Sometimes we do, sometimes we don't. But that's what I wonder. That's what I'm wondering as soon as I see this. Are we going to get another pullback, a retest of the July low, retest of the 100-day moving average as part of a longer period of consolidation? Because we've always got to remember that these big upward moves often lead to lengthy and proportional consolidations. And that's if the upward trend remains intact. Sometimes these stocks just, whatever was driving them, the storyline goes away and the whole thing unravels. That can happen. But if this is an ongoing trend, these big ongoing trends that have large advances, they often then have those large consolidations as well. So I'd be looking out for that at the moment. If this were in my portfolio, I'd certainly be holding it. I'd be using a wide trailing stop, giving it lots of room to move. I'm not in a hurry to buy it because of that possibility of a larger consolidation. But yeah, look, you just never know. Some of these stocks, it could have a long way to go to the upside. So that's why I want to stay on board. I don't want to jump off what could be a mega trend at a relatively early stage. But saying that, I also know that most stocks don't become mega trends. We only know in hindsight, but for the chance to be on one, I think you've got to give stocks like this lots of room to move. If we get a consolidation, let's see what the consolidation looks like. Does that provide an entry point? It could do that as well. So yeah, it'll be an interesting one to see what happens.
All right, we'll finish off with a few more here because we've gone over time. So thanks for hanging around, people, and it's great having you as always. Let's have a look at WBC, please.
Uptrend's in place, above the rising moving averages.
That's Westpac.
Yeah. So it's look, it's just, if this were in my portfolio, I'd certainly be holding it and giving it room to move around. It's a bit stretched above these moving averages now. It's had a big run off the lows. Certainly scope for some consolidation, but yeah, trend remains up as it does in, I think, all the big banks at this point.
Yeah. All right. Let's have a look at PXA.
Yeah. So remember before we were just talking about the zigzag structure I look for. Prices get stretched. They have an initial leg down. They have a bounce. There's a zigzag. So this one's done what I'm thinking could happen with a couple of those other stocks we've spoken about. So it does look like a corrective move so far. So it's a stock which has come off a long declining period. Like, this does look like it's got the potential for a basing structure. Like, you just look at this and sort of, there's a bit of a rounding basing formation in that we had a series of lower lows, which is now turned, and we have a series of higher lows, and of course higher highs. So that's the building blocks of a trend change. So I think there's potential for trend change in this. Now, if that is the zigzag correction, it then opens the pathway for, like, do we get price action like that? Can that develop from this structure? I think the answer is yes. This sort of price action could develop. So if I'm in this stock, I want to stay in it. I want to see whether it can deliver. A lot of these stocks do not deliver on their potential. We're looking for structure which can deliver profitable outcomes where we can manage risk. We can keep risk relatively small to our potential upside, but we know that a lot of the setups just won't deliver. So we take those relatively small losses, not a problem. We move on, and we just wait for the big ones to deliver. That's how it works. So we've got a structure that can, like, I'd rather buy this than buy Woodside at the moment, because And it could go the other way. Woodside might be the great winner and this could be a flop. But I know if I play the structure like we can see here in PXA and avoid stocks which are below declining moving averages, I think we put the odds in our favour. So if I was in this, I'm staying in it. If I'm not in it, I'm interested in it. I'd probably rather buy into a bit of strength, just given the market volatility. Maybe it's around, maybe just look at these recent highs. Maybe buy it. Maybe I'm buying it up around, where's that, 1475, and getting it into a bit of momentum. Then I can have a stop loss back below the 100-day moving average, thereabouts. I think that's putting the odds in my favour if I do that. There's always a chance if I buy it now that it continues to chop sideways and starts to lose momentum. So if I'm in it now, I've got a stop loss that will maybe just below the August low. Maybe that's a good place for now. If I was in it, maybe a stop below the August low. If I'm not in it, I'm just going to watch, see whether it breaks higher again, and then maybe get in with a stop below the 100-day moving average. Few scenarios, depending on what you're thinking and where you are currently with this one.
Yeah, and in our next show, we're going to talk a bit of go back to some entry strategies. I think one of our viewers obviously sent a question in around this, and we're going to miss out on time for today. But we might get into that in our next show, talking more about entry points. I know you go over it with our tickers here, but we'll get more in depth in that in our next show, I think. Right. So let's just finish off with a couple more here from Huzzle. OBM, please. OBM.
Yeah, this has been trending nicely, this one. Trends very much up. I hesitate to buy here because it is stretched above the moving averages. It's a motion trader stock. Motion trader signal probably would have been, it's a lower price one. I'm actually not sure where it would have kicked in. It meets the initial criteria back in November, and it's been trending nicely. All these periodic pullbacks to the moving averages. Here's an example of the I was talking about earlier. I like the sideways compression back into the moving average and the breakout from that. These are the structures I'm looking for opportunity. That's when I want to be buying them, when they're coming back to the averages and breaking out. Once they've run from the moving average, I want to be holding them, but I just become more hesitant towards buying them. I think they're harder to buy higher, just because of where do you manage your risk? You've got to have your stop so much further away. But yeah, certainly one I'd be holding if I had it.
All right. FND.
Was that FMD?
N for Nelly.
Yeah, we've seen this structure a bit. So is this going to turn into the zigzag? So I'm happy to hold it. All the reasons you can overlay this stock with a couple of other ones I've spoken about already. Happy to hold it, wide trailing stop. Don't want to buy it at the moment. I'd like to see how if this is a longer consolidation, how it plays out. But yeah, certainly one I'd be hanging on to with my wide stop if I had it.
All right, and lastly, not leastly, let's have a look at LKE, please. No. It's in a word. It's like you're just fighting this downtrend. It's like, why do you want to do that? Why do you want to fight the downtrend? It's like people have been trying to get the low in these lithium stocks for so long, and they've lost so much money trying to do so. Now this could be the low. Maybe this could be it. But look at the share price now. So the share price is now 3.7 cents. I think the risk, you could say, look, I'm just going to buy it here, and I'm going to put a stop below the. I'm going to buy it here. I'm going to have a stop below the recent low, so I'm going to risk 20% on it. Maybe, but there's also the risk that once a stock's down this low, there's also the risk that management puts out an announcement saying we're pulling the shutters, we're out of business, and you haven't lost 20%, you lost 100%. So
I think it's extreme risk. I'd say, like sometimes I say, look, I can see this. Put your stop below the recent low, and you punt it. But here, I think you're punting 100% wipeout as well. I think you've got to take that as on board as being a meaningful probability or possibility, a meaningful possibility. I'm not saying it's going to happen, but it's a whole lot more likely to happen than when the stock was trading up at 47 cents. I'd say extreme caution around Lake Resources at this time. We could come back next week and it's doubled, and someone go, "Oh, look, it's up 100%." You're completely wrong, but I'm managing risk. I can go down to the casino and go black or red and double my money as well, but that's not the game I'm playing. It's I'm looking for opportunities where the structure looks right. I can manage risk accordingly. My upside is greater than my downside. I'm just not confident managing the risk around when we've got this sort of situation.
Okay. All right. Well, yeah, it's not a pretty looking chart, but just remember, everyone, we're just giving general guidance on the way we look at the charts and trading, right? If you have some other reason that you want to get in, that's your choice, right? Once again, please do your own due diligence. As always, we're only just general advice. All right. So thanks, everybody. Thanks, Jason, for another great week of insights this week. Thank you very much.
That's been fun. It's been good, Rog. And look, with Lake Resources, I don't know what's going to happen. I really do not know. So, as I say, I'm here to manage risk, and everyone's going to call it their own way. Some people will just say, look, I could 10x my money in this. Maybe it will happen. But it's for me, I'm focused on what I could lose first and then what I could make second. At the moment, what I could lose portion is just too hot for me. Maybe not for someone else. Up to everyone to, as you say, to make their own calls, because all we can talk is generally about round markets, and everyone's going to have their own way of doing things that works best for them.
All right, thanks for that. Thanks for that clarification, Jace. Just for next week, we'll be off next week. I'm having a week off myself. So holiday season's here in Australia. Well, I'm trying to get away from the cold weather in Victoria anyway, just for at least 1 week. But we'll be back the next week. All right. So please you can have a break from us. Have a great week, everyone. Stay safe out there, and you too, Jace. Thanks a lot, mate. And we will see you in a couple of weeks' time.
Look forward to it, Rog. Everyone, thanks for joining us as always. And